Today we're going to talk about the 10-year 3-month spread again. We're going to talk about revolving credit. We're also going to look at some important charts here and talk about some key levels as the market is closed today. We won't be looking at any live data, just simply analyzing what was going on yesterday. It was a little crazy over here in Los Angeles yesterday. It still is a little bit, but we're getting through it over here. Okay, anyways. So first we're going to look at the 10-year 3-month spread. We can see here that it has come up to 3.2 and has gone flat there, which is a bit of an acceleration since the end of the year. On December 30th here, you can see it was at 0.18. Now it's at 0.32. When it gets to 0.36, that's a double up from where it was just a week and a half ago here. Now, we're also looking at the first week of January in terms of its stats being green or red. That's going to be an interesting thing that is also quite important. Since we didn't get a Santa Claus rally, if we also get a first week of January, that is also a bit of a scary thing here. And if some of these things all align, I may go heavy into cash for a little while just to assess the situation and see what's going on. Revolving credit. Now, this is the amount of money on credit cards that Americans are carrying. And you can see here that now we don't have up-to-date data on this. The December data should be coming out here pretty soon. But right now we only have up to November. And you can see that in November, that dropped. It dropped a bit. And that is a bit of a concern, basically. If debt is going down, that means that instead of buying new things, Americans are paying off old purchases, which means economic slowdown. So less debt, kind of rough there. One other thing we want to look at here. So yesterday we had jobless claims. Those came in at 201,000. So that was lower than expected, basically giving the Fed even more room to breathe here. Today we've got, let's see how many we got. Let's go 1, 2, 3, 4, 5 Feds speaking today. The market is closed, so there won't be any reactions to that. The bond market is open till 2 p.m., so that will react to all of these, but it's usually a less intense reaction than the stock market. But we have 5 Feds on the mic today using that third tool of theirs to influence not necessarily policy, but the market itself, and that is the microphone. They're using their microphone to bash us on the head here and beat us down so that they can build us up later. Let's see, we've got the unemployment rate coming out tomorrow. That'll be really important for us in terms of, is it going up or down? We kind of want this to go up if we want the market not to collapse. But of course, that going up means people are out of work, and that is also a rough situation. All right, so let's go look at some charts here. So we've been getting a sell-off for a while here on the SPY. Honestly, the SPY has basically been selling off since Christmas. And a lot of this is coming out of concern for what the incoming president is going to do. A lot of this is coming out of the fact that a lot of the policies he's been touting will be inflationary, which will prevent the Fed from doing what it wants to do, which is be easy on money flows and easy on policy. But if inflation is coming up, then they can't be as easy on policy, as dovish as everyone wants them to be, which is causing the market to get a bit shaky and worried about what's going to happen. Okay, that's basically the gist of it. Now, you can see that the SPY has been trading underneath the 50-day moving average, and it's done so several times. Yesterday, it was below it, it closed beneath it, opened beneath it, and closed also beneath it. If we do not get back up and above $593.75 on the SPY, which would be 5,930.75 on, or 3,937.5. Anyways, on the S&P, if we can't do that, and I'm talking doing that in the next few days, like by midweek next week, if we cannot do that, we're in a world of trouble. Okay, and that is going to be a continued signal that something bad's happening. We may be finally breaking the way that we thought we were going 2 years ago. So look at this. So this line here, if we can't, even if we get above the 50-day moving average, if we hit this line and reject again, we're coming all the way right back down into this area again. That sucks. All right, this is bad. If we lose that, if we lose the 50-day, the 200-day is all the way down to 555. Okay, and we go onto a weekly chart. Let's see what that looks like on a weekly chart for the SPY. Okay, yeah. So the SPY's got a little bit of 580 here for the 21 week EMA, but again, in order for this to get bullish, we need to get above this white line. We have to get above that white line. If we can't conquer that white line, then we lose that blue line. And then on the weekly, we're looking at 548 for the 50-week moving average, which we haven't gone down to in a while. Now, we might see something like this where we've got that huge flush for a couple of weeks, and we dropped. How much did we drop? Off the top on that little spike there back then in July. That was a 10% dip. Okay, not too bad. What have we done so far? What have we done so far? So far, the dip has been about 4%. So we could double that. So we could double that dip. 10% would be, 10% would be hitting the 50-week moving average, which is all the way down at 548.37. Okay, so that is potentially what we are looking at going into the next month and a half. Now, what is that going to do to risk on assets, you may ask? Let's go look at Bitcoin. Bitcoin's trading today. Let's go take a look at that. Let's see, 93,000 right now. So it is floundering a little bit. It's just kind of sitting there floundering. It can't seem to find a bid to drive it much higher, and that is bad. We can see the average force is getting weaker. Let's make that a little taller. Getting weaker. Stochastic ribbons are pointing straight down. The BX extender, it looks like garbage. This is all just bad. Okay, we could come to the bottom of, so if we lose $90,000, we're going to go to the bottom ATR band down here in the 80s, right? Like 85, maybe 84, maybe even lower. And then from then on, until we break out of this ascending channel, which is going to be this resistance line above here, which if we got down to 85, like let's say end of January, this looks like end of January, the top of this line here is $92,000, which is a descending resistance line that we are currently following, and that is pretty disgusting. We need to break that. We need to break that. We need to do it soon. If we cannot do that, if we cannot break that, if we cannot do it soon, if Bitcoin does another, let's turn off all the drawings, if Bitcoin does another red month here at this point in time, I'm going to be, see, look at this wick here. Those look like tweezers. We got some tweezers coming in on the monthly chart for Bitcoin. We lose that. We're going to hit the 5-month, which is down at 85. We lose the 5-month moving average. We're coming down to test this previous high, which is down at $74,000. Okay, that is going to absolutely decimate our positions here. So, what am I doing in relation to this? So, I am looking at the daily, right? Watching this, we're below the 50. That sucks. The 200 is all the way down at $73,000. Basically, the line in the sand here is $90,000. If we start trading underneath $90,000, I'm going to take whatever profits I have and I'm going to sit on my hands for a while. Basically, that is what I'm going to do. So we lose $90,000. I'm going to sell my IREN. I'm going to sell my Bit Digital. I'm going to sell my CleanSpark warrants. Possibly, we'll see. Those I might have room on. I'm going to sell. Oh, that's going to suck. I'm going to sell my MSTX for a loss. That's going to be a brutal loss. And I'm going to sit on my hands and wait. I'm going to wait for a bottom to come through and for it to start to base and then look at it again from there. That is basically the plan here. You can see that we are trading beneath this spike in volume. Okay, so it's not enough that we hold $90,000. We have to get back up above $97,500. We have to get back above that, and we have to do it in the next 2 weeks. If we can't do it in the next 2 weeks, I'm looking at this thing to go into the 80s. Okay. I know this is kind of a doom and gloom video, but that's what I'm looking for. Now, that doesn't mean I think Bitcoin's over. I don't think that this was the top, but I do think we have a flush potentially coming through here, unless we get something very supportive, specifically out of the government, is what we're going to need at this point. We're going to need something super supportive out of the government. We're going to need people to stop fudding things like that fork everyone's talking about from BlackRock, saying that BlackRock wants to make its own version of Bitcoin, which is what they will be selling you in their ETF instead of actual Bitcoin, and we need the incoming president and their Doge office to actually do some really, really positive things really fast. And I just don't know if they will do it really fast, because honestly, it's probably not the biggest concern that they have right now. We've got multiple wars going on. We've got serious issues with immigration that they want to attend to. We've got issues with, for some reason, we're talking about buying and annexing a bunch of countries, which that doesn't even make sense. Like, okay, whatever. So promoting crypto and making it a major player in the first weeks of their agenda doesn't seem likely. So I mean, I would love to eat my words on that, but there's a lot of bigger fish that they have to fry, I think, in my mind, before they get to, saying Bitcoin's a reserve asset or something like that. So we could be seeing some significant pain coming through here in the next weeks and months, and we may not. I mean, we could see Bitcoin, like the last cycle, go dormant until the end of the year, just like last time. Where in Q, I mean, this isn't even Q1. This was in December 18th. We could see that be the local peak for several months, and see it not come back till like October if we do not get a turnaround real soon. So that's my doom and gloom for the day. Now, if we can get back up above 97.5, we have the chance that this could be an inverted head and shoulders that we're looking at. That would take us right back to the all-time high and possibly even higher, up to 120 or so. I would love to see that. That would be fantastic. But as long as we're holding 90,000, that's the line in the sand. We lose 90,000, and we are going to have a significant and terrible flush. I do think it will rebound from, but it is going to be excessively painful when it happens. So that's that. The other big thing, Ethereum. If Ethereum does not perform this month, that's that for Ethereum. I'm going to be closing my digital positions if that happens, if Ethereum can't perform this month, because January, February, March, those are Ethereum's months. If it cannot pull performance out of January, I'm going to start losing some confidence in Ethereum for the short term, and I'll be looking at exiting my position of BitDigital and then re-entering it once Ethereum has stabilized. So that's what we're looking at there. Solana also had a significant and serious drop off here. It's having trouble getting back above the 50-day moving average right now. The 200-day, it's getting close to trying to tap the 200-day again, which it probably will. If it comes back to the lows at 177, the 200 will probably meet it there. Now, I do think the 200 is going to probably hold Solana up, but again, it's not fun to see it, especially when this makes up a huge part of my portfolio. One more thing I want to talk about is Palantir. Let's get all the way down here. Palantir has broken the $70 range. Okay, it's broken the $70 range. It's come down to just about the 50-day moving average. Now, I had a couple of covered calls that I got into in the mid 70s, and I have closed those for now. I am looking for Palantir to do a bounce here, maybe come back up to the 5-day around 72, and then curl back over and test the 50-day again, probably at about $67. If we lose the 50-day moving average, you better believe we're going to come back down to $60. I think that's the next area we will see support for Palantir. And if it does not hold there, well, then the next level of actual support is all the way down at about $45. Now, why are we seeing this right now? If you go to their SEC filings, and I'm not going to bring it up right now, but there are tons and tons of insider selling. Every time this thing comes up to $80 or above, a huge amount of 144 forms comes through for Palantir, and the insiders are selling it like crazy. They're selling it like crazy. So there's a huge, it's kind of like the 200 wall on Amazon that Bezos was causing for such a long time. Right now, the Palantir employees, the insiders that are getting the stock options on their paychecks, have a call wall, basically, or not a call wall, but a wall at $80. When it gets to $80, they sell a bunch of stock. It comes back down into the 70s, this time into the 60s, since there were a few that were quite enormous in size in terms of the amount of shares they were selling. And then they start taking their foot off the brake, letting it come back up to the high 70s, 80s, and then they start selling again. So we're going to be seeing, once they've enriched themselves to the appropriate amount that they feel that they deem appropriate, then we will see Palantir rise higher, probably into the 90s, maybe even $100 in the coming year or so. There's also concerns, though. Now, this is where we're getting concerns here, that with government cuts, Palantir gets half of its revenue from the government. If the government is looking to cut spending, they may cut it from Palantir. Now, Palantir makes itself pretty ingrained in a system, so we may not see that occur, but there are fears of it. It's FUD. I don't think that the government can really lower its Palantir spending at this point, considering that it is, the world is at cusp of war, and Palantir is at its core a war stock, because they do a lot of contracts with the U.S. military. So I don't think we'll be seeing any cuts from Palantir, and that would be, in my mind, that would be folly. We should not be cutting that spending right now. I know it's been inflated for a really long time and has been the largest line item on the government spending for decades. But I think right now, at this time, that would be one of the dumbest things we could cut, considering global politics right now and just what's happening everywhere. Anyways, Palantir, I don't see it collapsing. I think that there's FUD coming through. I think that the employees that have the stock options on their paychecks, on their payroll, they are enriching themselves, which they're allowed to do, and it makes sense. They put in the work. They held onto the stocks. They are allowed to sell, and that's fine. But I don't think we're getting through $80 anytime soon. And when we do get through $83 or $80, when we do get through $80, it's going to be quite the explosive event, I think. All right. So that's basically all I want to talk about there. I still think Tesla has got a date with a lower level here. It's following this resistance down. It's staying in this channel. I think Tesla, I would expect Tesla to see, I'd like to see it hit the 50-day moving average some point soon here. Google has been underperforming ever since it had that one bit of news for quantum computing. It's like they don't even know how to run a hype train. It's kind of embarrassing, honestly. Vertiv is another one I've been watching very closely. I like these wicks on bottom. I don't think the sell-off is over yet, though. I think that we'll probably see this thing touch the 21 and the 50 here before launching back up above $35. So I am still just watching that one. AMD had a brutal day, but it is making still higher lows. So if we can turn around here and hold this low here at 120 and not go any lower, we are still in an uptrend on AMD. Nvidia is struggling at that 140 level. I got in calls, sold them up here, and I'm looking for this thing to hold the 50-day moving average. If it can hold the 50-day moving average, I'd be looking at it to crawl up. I think around earnings here, which is going to be in late February, that'll probably drive this thing higher, especially if Blackwell is doing what we all are expecting it to. Anyways, that is all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.